Hello, everyone. Thanks for joining the webinar today. Hope everyone is safe and doing well. So what is going on? What is happening? Wanted to talk to you today just about commercial real estate and the Fed cutting rates to nearly zero, $2 trillion of stimulus, and today's jobs claims, 3.3 million people filing for jobless claims today. That surpasses any job claim number we've seen 5 times. It's clearly a historic time that we've got going on, and we don't have all the answers, but we're going to help you walk through a few different things that we're looking at and some opportunities and such. So thanks for joining us. We appreciate it. History is being made. There's just one thing is very clear, is I don't have all the answers. I don't think anyone does. Any leader that's speaking to you out there, there's a lot of people that have ideas as to what's happening and what's going on. And we do not have all the answers, but we've got some key points that we want to help you walk through. This is a quote that I saw here earlier this week from Helen Keller, and many of you probably know who Helen Keller is. She was blind and deaf. And although the world is full of suffering, it is also full of overcoming it. And so that is should give you some optimism here today. So today we're going to talk about what should I do. We're going to talk about providing leadership. We're going to talk about how education is key, and what opportunities that I'm seeing and that might exist out there, and how to be adaptable. So let's go ahead and move forward. What should I do? Panic. Should we panic? No. Fear is at an all-time high, and this is a chart of the volatility index of the stock market, of actually the S&P 500. And you'll see on here that this goes back about 15 years. And you'll see the largest point there in 2000, late 2008, 2009. The volatility index hit about 65, and earlier this week we hit almost 80. So we've surpassed the fear index, the volatility index in the stock market, and this is really the gauge that many investors look to for when things are fearful. And clearly, things are fearful now. How we view things determines how we do things. And I got the opportunity to meet John Maxwell last year. He's a mentor of mine. And he said this on a call that a variety of us had with him earlier this week. And I think that really helps set our focus as to the situation that we're currently in. So perspective. One thing I want to make sure that we have is perspective. And so we want to make sure that we put people first. And clearly the situation that we're in right now with COVID-19, we've got to put people first. The priority is to the people, safety for the people. And you have to be asking your questions. How can I serve my clients, my team, my family, my community? All of these things are obviously very, very important, and we've got to put them first. We have to be flexible, and a lot of us maybe have a plan B, but we may not have had a plan C or even a plan D. Flexibility is key. Who would have thought that Zoom would become the #1 way people are communicating with? I've had meetings with my team this morning throughout the week, and we're using Zoom. So we're adapting and we're learning on how to be flexible. I'm having anywhere between 3 and 10 calls a day on Zoom. Number 3, communicate. Want to make sure that you are communicating judiciously. Less talking, more thinking. And when you communicate, you're making sure that you're doing that with discernment. 4, leadership. People want a leader. They want to know a leader's voice. They want to hear, and a leader's voice is really someone who is different than maybe the media, what you're hearing out there. someone who's not panicking or calling for a variety of issues to occur. Your voice should be calm as you speak to your teams, as your clients. They want to know that your voice is different than what they're hearing from the fear and anxiety in the markets today. What's my center? You got to know what your center is, because it's easy to go to fear and anxiety and a variety of these different things that we're all experiencing. And so what is your center? Is it your family, your faith, your values? Again, it's know what that center is and that rock in your life, and come back to it often. It's okay. Again, we're all fearful. We all have worries, anxiety, a variety of issues that we're looking at. But I just want to make sure that in this time that you know what your center is and that you're coming back to it. And then finally, stay in your routine. You know, I think it's really important. And we've been talking to all of our team members and people that we work with to stay in your routine. Make sure that you are getting up, getting out of bed, whatever it is that you're doing on a daily basis, that you stick with that routine. Exercise, time with your family, getting into that same routine. That routine may be different, but making sure that you're meeting with your team on a regular basis, daily, maybe sometimes multiple times a day. Using Zoom to be able to be in touch with them in person. I think that just provides calm and clarity as you move forward. Provide leadership is the second thing I wanted to talk to you about today. And again, repetition and providing leadership is really key. So we as leaders need to say it over and over again. People need to be reassured. I'm on a call with my team daily, and there's a shot right there of the call that we had this morning, and so everyone on the Zoom call here. So you want to make sure that you are we're communicating, we're providing repetition, and that there is some sense of normality in our lives. Mental state. Where am I currently at? Where's my team at? One thing, and I have a couple of coaches in my life, and I think it's really important for you to have a coach, someone that you can rely on, and someone that you can bounce ideas off, a mentor, a leader. It can be someone from a podcast. It can be someone from an actual coach that you pay. It could be a variety of different situations. But what I think is really important, and one thing that my coach said to me last week is this happening to me, or is this happening for me? And so many people are saying, I can't believe this is happening. Can't believe it's happening to me. But I think that we need to remind ourselves that this is really happening for us. I think that if we put on this is happening to us, it's a victim mentality. If it's happening for us, which I truly believe it is, I believe that it's a gift. I think everything is a gift. And so that mental state and how you look at things as you go through is really, really important. And some of you may know, some of you may not know. I had cancer almost 6 years ago, and I felt that it was actually a gift in an odd way. It was a hard thing to go through, and I ended up writing my final letter to my wife and kids, and I have that letter here. And it hasn't been opened because it hasn't been needed to be opened. But when you write your final letter for your wife and your kids, and you mean it, it changes you. And so I think that everything that we're going through is an amazing opportunity to look at things differently and with a different lens. And so I urge you to definitely look at it that way. So education, the third thing that I wanted to talk to you about today is education, and it's key. And now's a great time to learn. I'm in Washington State, and we're under lockdown as of midnight last night. We cannot leave our homes, and real estate, for the most part, is not an essential service in our state. And it's a great time to be learning, educating yourself with different things that you have going on. This is just a little bit about me. I am a CCIM. I hold the CPM designation through the Institute of Real Estate Management. I have been quoted in the Wall Street Journal and a variety of different trade magazines and such. And I like to say that I can lease, value, manage, help people buy and sell their assets. And so we do everything commercial real estate. And as a part of the CREE training here, we offer a variety of tools and things that we'll go through here at the end. But just wanted to introduce myself a bit and talk to you a little bit about what we teach in our education and give you some tools to be able to do some teaching and training yourself. So one thing that we talk about in commercial real estate, for those of you that are in the residential market and maybe haven't done commercial real estate, you'll see the green people here, and that is the potential opportunity for you as a licensed real estate broker, as a commercial broker, to represent different people in a commercial transaction. And so you can be a buyer's broker on the sales side, you can be a seller's broker on the sales side, and most of you understand that. Many people don't understand that there is a whole other side, the right side of leasing to commercial real estate. You can help someone be a tenant rep. So that tenant that's looking for a space to lease, you can help them by representing them. And then you can also represent landlords. And so really there's 4 different options for you to represent someone in a commercial transaction. And we talk a lot about that. Investors are still buying commercial real estate, and there's 4 main reasons that investors buy commercial real estate, and they're listed right there in front of you. 1 is for cash flow, 2 is for principal reduction, 3 is for taxes, and 4 is for appreciation. And so we have some tools, some spreadsheets for you to be able to utilize, to be able to analyze properties, utilizing and looking at all of those 4 different reasons. The NOI formula is another thing that we talk about. We look at how we get to NOI, which stands for net operating income. And that is the number that we look at constantly to be able to analyze a property and determine its value. And so we do that through determining what the potential gross income is, minus vacancy, plus any additional income, minus expenses, and that gives us our NOI. And so in our case, in our class that we offer at CREE, we offer a variety of case studies, and we have 4 different main asset types that we look at. Multifamily, office, industrial, and retail. And so we have 4 case studies for each property type. And this is an apartment building. Again, I'm an active broker, and this is a property, a deal that I actually sold a few years ago for $4 million. It had a net operating income of about $213,000. It had a cap rate of 5.3%, a cash on cash return of 4.4%, an internal rate of return of just under 16%. And then some of the metrics are right there in front of you on the price per unit and price per square foot and the NOI per foot. So if you know all of this, then you can teach the class for me. If you are interested in learning more, we've got some tools for you to be able to do that and some free case studies. So in our free case studies, we'll give you some of the tools that I've used to analyze these properties. And this is an industrial property. Again, it's a smaller industrial building that I sold a few years ago. And there's the metrics on that. And then some leases, some lease transactions that I have been involved with, one for office and then one for retail. And so these are all deals that you as a broker can be paid on when you're doing leasing, whether it's office or retail. So some other things that we talk about in our course are sales and due diligence. And this is really my cheat sheet for due diligence. When we're working on a sale, we go through 10 steps, and there's a variety of additional things that you can do. But when we're analyzing a property, we analyze 3 years of profit and loss. I try to look at monthly cash flow statements. We study the rent rolls to analyze the historic rent rolls to determine the property have things changed. What has occurred, what hasn't occurred. Did they just lease up this property, or what was it vacant for 3 years previous to this? We like to understand a multiple year time period as to what's been going on with the property. We're kind of an investigator, if you will. We got to analyze the leases, and depending on how many there are, you will most likely need an attorney to help you review the lease, or help your client find an attorney that can help you analyze those leases. We also contact the city fire department to see if anything's been red tagged. It is a good practice to interview the tenants during due diligence when someone's buying a property. You might hire an inspector or a contractor who can give you an unbiased assessment of the property. And then I like to also review all of the expenditures for the past 5 years. And this will really give you insight as to how well the owner has maintained the property. Have they done anything to the property, or did they replace the roof and the asphalt here within the last couple of years? So again, all things that you're going to want to do in commercial real estate due diligence. The number 9 is complete a market survey. And again, you might have a property that's vacant, 100% vacant. It may have been an owner occupied property, and you need to determine what the market rent would be. And so looking at the market rent and determining what some comparables out there in the market are, depending on the asset type that you're analyzing, and you need to complete that market survey. And then everything else. There's a variety of other things that you're going to want to do when you're analyzing a property. We try to get tax returns, balance sheets. We look at title policies, insurance policies, a variety of other things. But this is just a good summary of things that you're going to want to do in commercial due diligence. I have a spreadsheet and a free tool for you to use. It's called the CREEcalculator.com. And effectively, this is my spreadsheet that I use to analyze things. And you can go to this URL and actually put in what property you're looking to analyze, whether you're buying or selling, what asset type it is, and then put in the income, the expenses, and it will actually do the entire analysis for you. And so it's a great tool for you to be able to utilize. And again, that is free to you. The next thing is I want to look at some opportunities. There are a lot of opportunities, and I think what you're going to see, and the clients that I'm working with, the questions they're asking today is, what has my value changed with the current situation? What is going on? Has it changed at all? And so I want to talk to you a little bit about what has changed. And this is effectively a 50-year plus year graph of the 10-year treasury rates. And you've probably heard about yield inversion, the 2-year crossing the 10 years, a variety of different terms that we've heard. And it's been predicted now for a bit that we might see a recession. Now, no one saw what we are currently going through. There's no doubt. That said, treasury rates are at historic lows, as you can tell. And that provides an opportunity. This is a snapshot I got yesterday just of current market rates from a variety of different commercial lenders that I'm always talking to and following. And I believe the 10-year treasury you see there is under 1%, 0.85%. And when I checked this morning, it was somewhere right around 0.75. So it's pretty volatile. It has been bouncing between roughly 0.5% to 1% the past couple of weeks. So very, very low. And a lot of banks index to that 10-year treasury rate. And so just something for you to keep an eye on and look. This is just a graph of from my investment account of the of basically interest rates. And you can see that we have been in a downtrend here really for the past 20 years. Rates have been moving down in this narrow channel. And so cap rate spreads are really something that I think you're going to see increase. And this is a chart from Real Capital Analytics that talks about spreads. And this was kind of late last year. It hasn't been updated recently with the current situation that we're going through, but this will show you, based on asset types, the spread of the interest rate to the cap rate. And so there is a direct correlation between interest rates, the rate that people borrow at, and the cap rate. And again, what is a cap rate? A cap rate in its simplest format is the NOI, that formula that we went through, the NOI into the purchase price. And really, even a simpler way is to think of it as my annual rate of return if I paid cash for a property. So if I paid $1 million for a property and I needed a 10% return, I'd need to get $100,000 a year. If I paid $1 million for a property and I only wanted a 5% return, I would only get $50,000 a year. So again, as cap rates go down, values go up. And the spread between the cap rate and interest rates is what you're looking at right here in front of you. And so what I'm predicting is that you're going to see cap rates, spreads increase as people look at the level of risk. Now, will cap rates go up or down? Hard to tell. But we do think that the spread between the two of them, as interest rates go down, will increase. And so with interest rates going down, and if cap rates stay the same, that spread is increasing. If cap rates go up, that spread's going to increase even more. And so we're just kind of gauging the level of risk and looking at it over different asset types. And clearly people are paying, they're willing to accept the smallest amount of spread or take on, I would say, probably more risk with apartments. Apartments have been very desirable. We have a housing shortage here nationwide for the most part. And that is providing, I would say, a lot of demand for investors buying apartments. And then after that, the next would be retail. And then we would look at office, industrial, and then apartments. Or I'm sorry, hotels. Hotels having the largest spread, meaning they really have the most risk associated with them. And the last thing that I wanted to go through and talk to you about was being adaptable. And, you know, we've got to adapt. We've got to adapt or die. Business keeps moving forward, but really differently. And, you know, again, whether it's through a Zoom call, how you're doing your marketing today, there's just a lot of different things that you can do differently. You can do it the same way, but in a different medium. And so I encourage you to look at ways you can adapt in your own business. How can I change my business to take advantage of new opportunities? This is a great time to sit back, ponder, and look at how you might do business differently. I own a property management company with a business partner of mine, and we've transitioned everyone to be able to work remotely. We have a software as a service that runs that entire business, and we're able to do that relatively well from a variety of locations. We don't need a physical office. Now, we still have to move tenants in, move them out, and when your people are not moving around as much, that poses some unique opportunities and challenges. But again, we're overcoming those in a variety of different ways. With brokerage, virtual tours of properties. I had a Zoom meeting last week with a developer client, the architect, and the contractor. We were reviewing plans. We were reviewing bids, which came in too high, by the way, and value engineering, all on a Zoom call, all four of us. Again, lots of ways to connect you. And frankly, we were more efficient in that meeting than we probably would have been had we been in person. So again, adapting and looking at new ways of doing things. Asking yourself constantly, what are the gifts that I'm seeing? There's a lot of different gifts. Looking at the positive way that this can benefit you, I think is really important. And then also, how has your demand shifted? This is the big question that clients are asking. They're calling me, they're calling my colleagues and saying, are people going to pay rent? How many people are going to not pay on the first of the month? Lots of questions, obviously, that are difficult to answer, but providing a calm voice and one that assures them that you're going to be walking with them through that way in a variety of different ways is really important. So here are some of my expected changes that I'm seeing. I do believe that mortgage rates are going to remain low or potentially fall even further. New construction may slow, but it's already exacerbated by a pretty short supply. And in our local market, we typically in the spring see a lot of new homes come on the market. And we also see a lot of people buying and selling in March, April, May, June. Those are big months, typically in the springtime for most of the U.S. and I believe you see most of your sales during those time periods. And so we're shut down. The entire U.S. is in a different mode. So what will that look like? We're going to need to obviously identify that. But with the short supply in the U.S., I do think that you could see some additional growth. Will the market pull back? Again, a lot of things yet to be determined, but we're seeing that. Number 3, QSR, that's quick service retail. For those of you that don't know, that's your fast food stores, quick service retail, we call it QSR. Still functioning, obviously limited. Those different stores shut down, many of them, to people coming in, but they're adapting and they're delivering. Drive-through still exists. And so we're hearing some success stories of QSR functioning, yet there are still, it's still an adapting and ever-changing time. But it is still moving, and they're doing their best to continue to adapt. I really don't foresee significant movement in cap rates. Are we going to see cap rates move up higher, which would then push values lower? I don't see it yet. But we're going to monitor the rents that are coming in. We're going to monitor this first week of this coming month in April to see how what happens, how properties are performing, who pays and who doesn't pay. There are some bright spots. I'm hearing reports of grocery and pet stores and delivery services actually doing as well or obviously better than they have in the past. And so there are some bright spots, and we do want to focus on those. A lot of people have been asking me, do I discount my rents? The $1 million question. And really, I think there's 3 different phases to this. And possibly you're going to see, again, maybe 2 to 3 months of partial deferral with commercial rents. Would that be paid back over the following 12 to 24 months? That would possibly be ideal. You could see a total rent abatement of that 2 to 3 months or possibly longer. We're seeing a lot of people use the term force majeure, and you may have heard about this or seen this. And again, the big legal question is this current COVID-19 situation considered an act of God? Does force majeure apply? And whether it applies or not, I don't want to say doesn't matter. Your tenants are either going to be able to pay or they're not going to be able to pay. So you got to work with them. And I think that may be difficult for some. It may be easier for others. And so I'm going to hop down to number 8, and I'll come back to number 7. But I'm hearing of banks really starting to offer some interest-only options, some rate modifications. One of my lenders on a shopping center that I own has already offered to lower my my rate 0.5% for a 1/4 point fee. And so again, you're going to see more and more of this being offered. I saw some news even this morning from an investor client of mine that was talking about having some interest-only options, and maybe that's for 6 months or longer. So more to come on this, and I'll do my best to keep you informed as we see different options. Again, banks, it depends on what bank you're dealing with, whether it's a local bank, a regional bank, or if you're in a CMBS mortgage, commercial mortgage-backed security mortgage, and there's some limitations with those types of loans and such. But again, talk to your bankers, talk to your lenders out there, see what options there are, and you can talk to your clients and provide those options and opportunities to them. Be that voice of reason in this time. And then going back to 7 is that, you know, we could potentially see a more commercial investment supply come on the market. You might have some owners that are just they've had it. They don't want to have to deal with the vacancy, increased vacancy, or some of those opportunities that are out there. They don't want to have to relet the space. They don't have the cash to relet the space. And so there could be opportunity for you as a broker to be listing those properties. People still bought and sold investment properties in the Great Recession, in the worst months of 2000, late of 2008 and 2009. I went back and I looked at sales. People were still buying and selling during those times. I just put under contract, representing a seller, an office building 2 days ago. People are still buying and selling today. Yes, I have had a deal fall apart because of the COVID-19 situation. However, there are people still looking at opportunities and options. So talk to your lenders, find out what rates are out there and available, create relationships with them, and look for opportunities. Because when people still are going to buy and sell, even in a down market, and I'm not saying this is a down market, but in a shifting market, and they're going to need you as a broker to be able to represent them, be a voice of reason, and help them work through those deals. The work you do today will prepare you for the opportunities tomorrow. And so I really urge you to stay vigilant, to stay in your routine, to be a voice of reason, and prepare for those opportunities that are going to exist tomorrow. So do the work today. Research, understand, communicate, have Zoom calls, look for the opportunities. Don't sit around and watch the news 24/7, which is not always good. Stay positive. I have some light music that I'll play to keep me calm during the day. Yes, will I watch the news and want to know what the latest small business loan opportunities are going to be for the $2 trillion package that was just passed? Absolutely. But you need to take a break. Come back to your center and know what's important, and keep calm. So next steps, again, many people have asked how I can get involved and what are some options. And again, we do sell our course. We're offering a discount today, and that's in front of you. And if you're on the webinar, you'll get an email with these codes and links. We also have a new product called Deal Junkie. We just talk about deals. One of the biggest things in all of my teaching and coaching is that we find that going through and analyzing deals is so helpful and so useful for agents that may never have done a commercial deal or only done 1 or 2, and you need to know more. I've got 30 years of commercial appraisal background, over 25 years of commercial brokerage. I don't know everything, but I've done a few deals in my past. And so, and if you do sign up for Deal Junkie, you get a 30-minute call with me. We also have the branded CREE Calculator. So you saw that free tool that I have, and if you want to brand one for yourself, it's $97 a year to be able to brand that, send that out to your clients and say, hey, when they have a question, as to value, you can be there helping them with value, and you can have that thing branded for you. And if you haven't already, we've got tons of free case studies. Feel free to sign up for those case studies, get the tools that I use, and feel free to use those. And I just provide that for free to you. Lots of case studies, lots of opportunities and options for you. So with that, I just want to say thank you. Appreciate you guys joining me today, and stay well, stay healthy, and just remember that the work you do today will prepare you for the opportunities of tomorrow. And so keep on the path. Godspeed to everyone out there. Stay healthy, and keep moving forward. So with that, this has been Troy with CREE, and thanks for stopping in on our webinar. Have a great day.